Well, everyone, thanks for joining us. I appreciate it. Again, we'll make it a fast webinar. We won't take up too much of your evening. And one, I want to say is saying Happy New Year. Thanks for joining us. And just want to start and share a little bit about what we have already for the beginning of the year. Again, my name is Jesse Trujillo. I'm the CEO for AJX Capital and AJX Homes. And we want to share today talk about our fund. It's a 506C debt fund, and that we can use in debt fund and equity and different opportunities for accredited investors. And also, I'll just get started. Who we are, for those of you who don't know who AJX is, me and my wife started this back in 2010, and we've been flipping homes since then, mainly in San Diego, and we've done over 1,000 flips since then, basically in 4 main markets. And then we also kind of transitioned into buying single family properties. And over the years, we built a big portfolio in Jacksonville, some in San Antonio, and San Diego as well. So we have about 200 doors between all our single family rentals. And recently, over the last couple of years, we started getting into apartments and multifamily. And we've currently accumulated about 900 units that we're involved in across the country in different states, about 10 markets in 5 states. You can kind of see where we invest in, right? California, you can see San Diego is where we started, and we have a big operation here. We're going to pretty much Sunbelt states. So we're in Texas, mainly San Antonio. We're in Mississippi, Alabama, Tennessee, Georgia, and Florida. A little bit about who we are. So me and my wife, we started this back in 2010, and she's the boss, but she lets me run it. And we've been in it for 20 years, and I've been done about 500 million worth of property we've purchased and sold. And again, as we mentioned, did about 1,000, close to 1,000 now properties in our portfolio, over 1,000 for rentals, and again over 1,000 flips that we've done. Our CEO, Lori, she's been a CEO for many companies, and brings a whole different variety to our company, and helps me run both companies and make sure that we're doing all our systems and processes are in place. And she has a big history of dealing with real estate and finances. I'm introduce you to Jeremy, our managing director for AJX Capital. Jeremy, would you mind saying a little bit about yourself?
Yeah, hey everyone. So I oversee the portfolio of multifamily for the most part, which encompasses around $100 million in total AUM, along with the fund oversight as well, and new acquisitions as we look and hunt down multifamily properties. It's a little bit not in the residential space, as our main bread and butter has been fix and flips, and we're expanding to the multi side of things. Previous to AJX, I've been a sponsor and a bridge lender, commercial real estate, historically and previously.
Great. Thanks, Jeremy. Abby, like to introduce you, she's one of our newest fund managers for the whole fund that we have for AJX Capital. Abby, would you mind introducing yourself?
Yes. Hi, everyone. My name is Abby Calabrese. I'm coming to AJX from another company where I worked on placing capital for large equity deals, usually multifamily projects, really working with investors and making sure we're finding the right projects that fit their profile. So if you move forward with us, we'll probably be on a phone call soon. So I look forward to it.
Great. Thanks, Abby. And last but not least, Paul Dufour. He's our investor relations. We've known each other for many years. He's actually was one of our investors for many years and still is. Paul, would you mind introducing yourself?
Yeah, hi everyone. Appreciate you coming on to listen to what we have to say. I have a 30-year career as a loan officer, and that's how I met AJX in 2010. Did my first loan with AJX and successful fix and flip, and did hundreds more with them as a loan officer, and quickly became an investor in all those projects, and came on board as the head of investor relations last year.
Great. Thanks, Paul. Appreciate it. All right. So just a little bit about our investment strategy. So AJX Capital runs AJX Diversified Real Estate Fund, which is really the vehicle that is investing in and lending money to AJX Homes, AJX Properties, and AJX Holdings. those are the three main companies that we use to buy fix and flips, buy single family rentals, and buy apartments. Kind of give you a little bit of rundown about the fund. Again, it's a 506c for accredited investors only with a minimum investment of $50,000. And our target raise is around $20 million. And again, that $20 million is diversified and used throughout our portfolios. How it works, so the fund will operate like a capital vehicle for acquisitions and asset management. Single family assets will be lent to by the fund and secured by recorded trust deeds of documents or mortgages. The multifamily equity investment opportunities will also be through the fund, but it is again be as more of an LP position, which means limited partner. And each investment member receives a promissory note and loan agreement for the loan that it's making to the fund as its investment. Three main investment options that we offer. Again, we mentioned the $50,000 minimum, and it's a minimum of 1 year. After the 1 year, we leave it open. You can leave it in there. You can ask to get it back. We're very flexible with our investors. Most of our investors keep it rolling, but you never know, like whatever happens in life, and then you want it back. That's just need to give us a notice, and after that 1 year mark, they can have it back at any time. So just to kind of roll down the three options. The first option, as you can see, it's a first lien position, meaning it's a first mortgage or a first trust deed against a property, whether usually single family or a rental. And those are that we're lending all the way up to and giving about 7 to 10% interest rate is kind of has been our history on those of annualized interest. The second option is one that we've used for many, many years since we've been doing flips. And when we get a first trust deed loan from a hard money lender, but the remaining amount that's needed to fix it, what we call gap funds. And so we end up borrowing that gap funds to finish the project. And we borrow that. So that's a second trust deed, a second mortgage position. And you can see, obviously, we offer a little more higher interest on those, between 11 and 12% at the moment on those. And the third option are multifamily. As we get multifamily deals in, we structure them differently. Each one is different. Today we'll be going over one, and it's usually but like a limited partner opportunity where you can actually come in, and our targets are usually a little bit higher, between 14 and 18%. Those are usually longer projects, but they do offer a higher return. So again, just wanted you to understand those are the three main options that we give, and we're going to be going over each one in the next couple slides to show you how we actually put those into our properties. Paul, would you mind mentioning, kind of talking about this first opportunity?
Yeah, this is an exciting opportunity. It's in Tampa. Entry-level house, which is predominantly what we do, is entry-level fix and flips. They're buying the house, or we're buying the house for $425,000. There's about $71,000 in rehab, mainly cosmetic, no permits necessary. Just changing the, flooring, new kitchen, new bathrooms, paint, etc. The house is in fairly good shape. We estimate the sales price to be $625,000 after the rehab is completed and when we're going to sell the property. So we therefore lend about 75 or 80% of that in a first trust deed position at around, believe this one's 9.5%. And it's a 1 year term. This project we figure will take between 4 and 7 months. That's the average length. In Tampa, our fix and flips have been about 4 to 6 for the last couple of years. So that's what we expect for this one.
Great. And I'll go to another opportunity. And this one's an example of our second position gap fund opportunity. One we have particularly here in San Diego. Paul, would you mind going over that one a little bit?
Sure. Yeah, this is a second gap loan opportunity. I've done numerous gap loans with AJX, all successfully done. We're buying this property for $500,000. There's about $131,000 in rehab. We plan on selling the house after the rehab for around $815,000. there'll be a first loan on this property for about $585,000. And this loan of $170,000 will be subordinate to that first. It's paying 12%. It's a 1-year term. The average flip in San Diego from 2024 has been 121 days. So that's, we expect these projects to last around 4 months from the time you invest to you get paid off.
Great. All right. And now let me just click over to our next, the third option that we were mentioning about the apartments. We have one that we have in St. Petersburg, Florida. Jeremy, would you like to tell us a little bit about that opportunity?
Yeah, so this one, as Jesse mentioned, is located in St. Petersburg. I'll mention that it's outside the flood zone. It's been well intact and well kept by the current sellers for several years. It's a smaller opportunity. It's 11 units, so we anticipate this opportunity to go pretty quickly. Currently, we're targeting around $900,000 for this raise. We're finalizing loan terms with the lender, so that amount might change a little bit, but that's the current target. And with that, we're bringing in limited partners as equity investors for a preferred return rate of 8%, followed by a 70-30 split to the limited partner. So just really quickly and simply, meaning us as the sponsors don't get to participate in the profit until our limited partners get paid their 8% preferred return first. And then after that has been satisfied, we'll then be able to share in the upside with you guys. It's a cash flowing opportunity using agency lending and fixed rate debt. So there's no floating rate debt on this particular multifamily purchase. And the closing timeline as of right now is targeting around mid-February for this close.
Great. We have another opportunity here. Oops, sorry. And maybe Paul, oh, sorry, Jeremy, could you actually go over this one a little bit?
Yeah, there's a couple more here that we have within our portfolio. There are more of these preferred equity plays. We're currently finishing out the construction of these assets that we've had within our portfolio and bringing them to stabilization. One of them is located in Mobile, another located in Columbus, and these are 50 units and 100 units. And we're just looking to finalize the project, bring them through, continue the lease up strategy, and stabilize, ultimately to either refinance or sell. With the preferred equity opportunity, it's a fixed rate of return, and each one's again a little bit different, given that these are not straight debt instruments; they're equity. So please feel free to reach out to Paul or myself. Your contact information is going to follow, and we can answer more questions on each particular asset if you're interested.
Great.
And I know we don't have a slide particularly for one of these other opportunities, but we did want to address our Jacksonville portfolio as well. It is similar to the second position that we showed previously. It is a 12% return, but the difference with a rental property versus our fix and flip properties is that rentals are generating income. They're producing income, and we're able to pay cash flow along the way. So we pay that interest only once every quarter, and then it's a 1-year term, as Jesse mentioned earlier, and a $50,000 minimum investment. So those are secured by, we have 170 units in Jacksonville alone across 165 properties. Some of them are duplexes, but most of them are single family properties. And we've been able to bring in investors who are looking to outperform the market, kind of feel secure knowing that their investment is collateralized and secured by a physical property. And we've had this portfolio now for several years and have kind of brought in new investors to the fold with this opportunity and just looking to expand and grow. As fix and flips come and go, this is kind of a different play to set your investment in for 1 or 2 years and continue to roll it and grow it.
Awesome. So again, everyone, if you'd like to reach out, you got to reach out to this handsome fellow here, Paul, and you can say the QR code or here's his phone number, email us directly. You guys, a lot of people have seen us on Facebook and all social media. Feel free to reach out to us, even if you have a little question. I believe in everyone having their questions answered before they even invest with us. Like, I'd rather you ask a million questions up front and feel secure that who you're working with, that you can trust us and you feel comfortable with us. Again, we've been doing this for a long time. Again, over 1,000 properties. Every single one of those has had private investors with us. So this is as we keep growing, as I'm getting older, and I'm making sure like we're a lot of our flips and the properties we're buying, we're being very careful, right? If you look at all our flips that we're buying, they're entry level pockets. I don't like doing high end homes. We do that for a reason. There's more buyers in there. We're trying to get in and out of these flips. That's what we do there, right? We're not there to hold them. The long term rentals, they're just because they're in great rental areas and they're cash flowing. So keep that in mind. And then the apartments we're buying, with our team, we do serious underwriting on every single one. We pass on deals all the time, which I say that because I like hearing that, because that means we did due diligence on it and it did not make sense, or we didn't feel comfortable wanting to bring in any investors into those. So know that we do our due diligence, right? Like right now, in the beginning of the year, we have this 11 unit. We might have a 200 unit in the future, but as of right now, we rather pick up things that we know our team can handle, make sure we can get our returns for our investors, and do our best, right? Be good stewards for your money. So again, any questions you have, this was just a quick little meeting. I didn't want to take up too much of your evening. Really reach out to us, set an appointment with us, have a call. It could be 15 minutes. And just even if you want to go down the line of what we actually have, like if you want to go more in depth on a property, if you didn't like those properties, maybe there's one in another market you might like, or a particular area, or a particular price range. So know that we're open to any questions and any comments you have there. The last thing I just wanted to bring up, and I posted this today, I was reminding people, a lot of our investors, they have 401ks, right, that they've had forever, and they've just been sitting there, and they're not using them from an old job that they had, an old, just from many years ago. And they're actually, some people didn't even know that they're there, and they're just losing money on them, or very, very low interest. We can show you, we can help you convert those to a self-directed IRA, which allows you to go ahead and you almost, on a lot of these, you almost have a checkbook potentially, or have the company, you tell them where you want them to send the money and they'll send it to us. So a lot of our investors are investing that way. They've changed their 401ks to self-directed IRAs, and we're making them more money than they did before with their 401k offerings. Paul, maybe I know you've invested with us a lot with your self-directed IRAs. Maybe in a little bit, can you maybe share a little bit of how
Sure.
easy it is or how hard it is to convert your 401k to a self-directed IRA? And then after that, how easy it is or hard it is to actually invest with us after that.
Sure. Yeah, I started investing through my IRA mainly because I realized that it was a great situation tax-wise. Everyone has money in different vehicles, non-IRA money, is taxed as ordinary income, the interest you make, whereas with an IRA, the money's tax deferred. So that's a big advantage for using your IRAs, especially if you have a traditional IRA or the 401k that you had with a company, maybe you rolled it over into an IRA. So therefore, you're able to be more flexible with how you use it. So yeah, it's been great for me because the money, is not money that I need right now because I'm working still, but it's great to have that money and it's compounding and you're not getting charged interest. If you have your 401k or your traditional IRA with a brokerage like Schwab or JP Morgan, Morgan Stanley, those companies, you'd have to transfer it to another company, just roll it over. There's no tax consequences. You roll it over into a self-directed IRA with a specific company. There are companies out there. I can give you some examples. I can give you many companies that you can call and see which one you prefer. I have a company that I use. It's based out of Ohio. Very easy to use. The paperwork takes just a couple minutes. They do all the transfer of the money, so you don't have to transfer. You don't have to do any of that. And it's a great way to use your IRA to accumulate wealth.
Yep, love it. Thanks, Paul, for giving the example. I mean, I really wanted Paul to share that because Paul's been investing with us for years through his IRAs, and I've just had so many people. I'm just giving an example. My sister, she had hers from an old position she had, and then she had children, and she just showed me one day. I was over there at her house, and she was showing me how it just kept going down and down and down year after year, and she didn't even know the option, right? So then the moment I let her know, and she's been investing with us for years now, and she's just enjoying that we're good stewards of it. And she knows exactly where it's investing. She could pick and choose which properties she wants to invest in with us. So just want to open up that door in case you guys know anyone or yourself that might have some 401k money there that's not doing something for them. Let us know. We'd love to talk to you about it. Love to put you together with the companies that can help transfer it over to a self-directed IRA and just kind of talk through it in case you have any questions there. So now I'd just like to open it up to and if there's any questions from anyone. But Jeremy, Abby, did I miss anything? Anything else you guys wanted to mention before we go into questions? No?
No, I think you went over track record. I don't know if you highlighted in terms of repayments of principal on firsts and seconds and interest, but 100% successful track record across 1,000 um, properties. So
Yep.
wanted to reiterate that.
Yeah, that's correct. Again, we've been doing this for a long time. I got a lot of gray hairs, everyone. So it's important for me. Without my investors, we're nothing, right? So it's important for you guys to know that we think that way, and you guys are what helped us grow. So all the investors that have been with us, we have 100% return rate on their money that they've lent to us. So, and I want to keep it that way. And the important part of the way to do that is one, knowing the markets, two, doing your due diligence, and three, really just being good stewards of it. There's properties that we lose on. I mean, we've done 1,000 flips. There's been several that we've lost on, but I make sure that we repay our investors, right? Like they've never lost with us because we're doing volume, and the volume helps us. If it's just one deal and we lost on it, it'd be hard to pay people back. But we do so many deals that, and we're winning on so many of them that allows us to make sure that when it does happen, because in the business of real estate, it does happen, right? Even for us that we're experienced, there's every so often there could be something, and we make sure that we take care of it, right? We get in, get out, move on to the next one. And that's kind of a little bit of our plan. With the apartments, same thing. We're doing our due diligence, making sure, being very cautious. We're in this for the long haul. We're not doing this for a short period of time. So just wanted to share that. If there is anybody with questions, I don't know if you could put them in the chat. If we can see them there, feel free to put them there and we can answer any particular questions you might have. I appreciate you guys joining.
Not seeing anything yet. At times we've had some issues in the past with questions, so if it's giving you an error to message or unmute, definitely feel free to reach out directly and we'll be able to facilitate any questions.
See.
But otherwise,
I think that means it was a very clear presentation.
That means I'm amazing on what I'm sharing. Guys, thank you. No, I don't know, maybe I see there's a Q&A option in the Zoom on the bottom. I don't know if you need to type it in there or not, but
Yeah. And if you can't think of anything now, that's just a great reason to book a call. I mean, that's what we're here for. We're happy to chat through the opportunities and any questions on how the whole process works. But it's really straightforward. We'd be happy to chat.